Hello, everybody. We are back. I'm Tom Sosnoff. I'm here with Dylan Radigan. This is Truth or Skepticism. This is every Wednesday for us, Dylan, and we get to tackle different topics. How are you?
I'm excellent. I am happy to see you, and I appreciate the consistency of this discussion, as otherwise I would lose track of time.
Yeah, this kind of grounds you.
How I know it's Wednesday, but the Wednesdays stack pretty quickly. Actually, it's remarkable.
Yes, you remember the movie back in the day? It was called "If It's Tuesday, It Must Be Belgium."
I do.
Okay, I don't remember who's in that. I'm thinking it was Tuesday Weld, but I can't remember. But if it's Tuesday, it must be Belgium. If it's Wednesday, it must be Truth or Skepticism. That's the way I look at this.
Exactly.
Okay.
Exactly.
There was a lot of debate in the office yesterday when we were talking about, what we were going to talk when we were discussing what we were going to talk about. We like to find topics every week that you and I can either be on different sides or we can have some form of a debate. We don't want to agree on everything. And one of the things that was bugging me that about all these, as we were looking at the markets and thinking about all these different chip stocks and AI companies and everything else and all the hype and everything, I was starting to wonder how all these various companies were going to be able to maintain the monetization of AI throughout this entire business cycle and beyond, because I feel like I'm not sure how companies like Tasty, I easily can see how a company like Tasty, just using our own company as an example, I can see how a company that is, a $1 billion plus company can commit capital to AI, and we can spend money on data scientists, on developers, on software engineers, on hardware, just connecting everything to the cloud, whatever else has to be done. I get how we can spend a lot of money on AI. I haven't yet figured out how we are going to monetize that spend the way that we monetize other investments that we make. So when I started to take that, when I started to look at our own business and say, okay, if I'm going to spend X number of dollars in 2024 and X times 2 in 2025, building out all this new, AI technology, and I can get it. I understand like building out things like blockchain and building out innovation and skunk work project. I mean, I'm that's what I'm good at, is building out stuff that, like I'm willing to roll the dice and take shots. I'm really having a hard time getting over the AI hurdle. I'm stumbling on how I'm going to monetize AI, and I've looked at kind of the traditional things that people are talking about, and I get it. I just don't know how.
Well, what do you find as traditional? What do you consider to be the traditional things?
Well, obviously, allowing our customers two things: internal and external. Internal would be allowing our different groups internally, like our compliance groups, our legal groups, and our regulatory groups, access to mass amounts of information with a single, basically with a single click, and that saves a lot of time and money. And externally to our customers, I can see how we can improve our support, because people with easy questions can go to AI bots, and I can also see how we can accelerate the learning process, access to tastylive learning tools and information and everything else. Also access from a technology side to scripting languages and all that kind of stuff. Everything can be done really quickly and really inexpensively. I don't know how to monetize that, but I understand how to use it.
But doesn't that, at the very least, doesn't that reduce your compliance costs, for instance, or reduce your editorial production cost? Like, is there some reduction in the cost of production on the compliance, regulatory, and content?
So
That's the low hanging fruit, right?
yes,
For AI.
and the answer is, does it make you more efficient? And by being more efficient, does that drop straight to the bottom line? And in a classic trickle down type of way. And the answer is,
Instead of spending 16% on cost of goods sold for content and compliance, it goes to 14%. So that's the theoretical sell, right?
I got it. But unfortunately, we do not see it reducing our professional service fee budget or our compliance budget. I don't see that. I mean, is it going to make us more efficient in a very short term? Probably. But is that going to drop to the bottom line anytime soon? I don't know. I don't know. I mean, listen, I'm never going to poo poo technology. My whole point here was I'm trying to figure out, there's no doubt that AI is going to make businesses more efficient. There's no doubt that it's going to make the economy more efficient. The question is that efficiency already built into the price? Is that market cap already built into all these stocks to where it's going to be impossible to maintain the current multiples, which are off the charts?
I mean, I think, but you're asking a variety of different questions, all of which are interesting. I think, regarding the marketplace, my opinion is that it is fully priced, right? But I'm probably very public in that opinion, to use a Sosnofian word. I think that most people that were to look at all the AI syndicate of publicly traded companies would say, this must reflect the knowable immediate value of this, and everything else is sort of an abstraction of pulling forward 5 or 10 years from now. Who knows, right?
Yep, exactly.
What I find interesting is, let's set the stock. So if anything, but I dare anybody to get short the stocks at the same time, right? And no one's going to who's going to short Nvidia outside of a moment, because they for an afternoon, because they have we're feeling crazy. But no one's going to have a structural short position, I don't think, any of these names, just because, for all the obvious reasons. What I find interesting, that and what you've just said, is you're very confident in the efficiency, and yet you feel like the efficiency, let's just use it for legal and compliance, but I think you could easily do it for marketing or editorial, will be the three verticals in terms of overhead places, or places where value is created for any company, but certainly for a content-based brokerage, is marketing costs, editorial costs, and legal and compliance costs. And I find it interesting that you perceive substantial, you didn't say substantial, but that you perceive efficiency is to be obtained by using this product. And yet you feel that the efficiency will not affect the cost of marketing, editorial, professional services. I mean, why do you think that? Why do you think you're going to get more efficiency but not reduce your cost? I mean, that's a sort of, seems mathematically impossible. You're either going to get, if you're getting more efficiency, by definition, you're either getting more growth, more customers, more value, more long-term value per customer, lower customer acquisition cost. Some efficiency, by definition, has to be reflected in some metric, right?
Whether I didn't say that it. I said there's a trickle down effect, and there is absolutely a chance. There's a good probability that efficiency will lead to will drop straight to the bottom line. There's a good chance. What I said is, I didn't see where that kind of efficiency would lead to a reduction in professional services. I mean, I just don't think that'll happen. Internally, I do.
Meaning for marketing and editorial costs over time will become, you'll get more content and more marketing per dollar.
Exactly.
Because of AI.
Exactly. But your legal costs won't go.
By the way, that's every company in the world, right?
Yeah, and legal costs won't come down. Your audit costs won't come. None of that stuff's always just going to continue to go up.
But editorial and marketing, you'll get more content per dollar.
You might get more content. You will definitely have potentially better marketing, better marketing potential. But then you run the risk of, I do think there's a risk of AI completely commoditizing marketing to the point where,
Sure.
where there's almost a destruction in creativity because it can only know what I think it has its
I
limitations.
mean, and if you look at where AI has moved the fastest and is the most present, and it is in the optimized marketing, right? Where AI will A/B test a tasty trade, trade with tasty trade, whatever the 2 second to 30 second stinger is on social media or whatever, in terms of identifying the target audience.
No, it's a Monte Carlo
Running the
simulation
A/B
for
testing.
it's an
But my
automated
point is,
Monte
they're
Carlo
offering that to
simulation.
every business in the world, right? There's no business on earth that's not being propositioned with some AI driven, A/B tested, targeted marketing scheme.
Yeah. Okay.
But I think you're asking an interesting question, which is, does the A/B tested AI powered marketing scheme, does it lower customer acquisition cost, and does it convert at a higher rate?
No.
And that I have
No, my real purpose behind this today was to say, behind today's discussion was to say, is the AI marketplace on a market cap basis grossly ahead of itself in an unsustainable kind of charge towards record valuations? Is that unsustainable? Because I feel like the monetization is so far behind the current pricing. Like, we are nowhere close. Now you will see in the tech world, there have been.
In other words, you're saying the marginal efficiency of whatever's achievable in 24 and 25,
exactly,
relative to any of the market cap, is there's no connection whatsoever.
Yeah. Now, we have seen situations in the past, Uber, Amazon, Facebook / Meta, Google to a certain extent, where the market caps were years ahead of the actual revenue models and the monetization. All those underlyings I just named. Tesla was another example where the market cap was way out in front of the actual, monetizing the business model.
And the dot-com bubble is the ultimate example from '99, right, where everything was.
Well, .com, but I just gave you the examples of all the winners. The .com example was the losers. But so sometimes the question is, are we? So that's a perfect.
Right, but I think the answer is yes, to cut to the chase. But the question is, how much is it yes? In other words, it's I think that the math would tell you yes, valuations in the AI names are well in excess of any apparent immediate monetization of the value of AI through marginal savings in editorial or marketing or whatever. At the same time, you're not trading against mathematics or the spread between the economic value of AI's relative margin improvement of a half a point or a point on some subset of the cost of operation. You're trading against the fantasy of an infinite future, which is why I bring up .com, right? So in other words, if it was math, it would be a layup to short NVIDIA or Microsoft, for that matter, or down the line, based on the math that we're discussing. I don't see how it could not be, but I don't see anybody willing to do it, and I wouldn't do it. I wouldn't do it with your money because of the market sentiment.
Got it. So then the next question that from this is, there's a lot of questions that surround the whole business of AI, and at what point does the cost of creating the bots themselves, what is the ultimate cost of creating the bots? Is everything that we create bot worthy? Do you know what I mean? It's like, is access?
Yeah, who knows? I mean, obviously no, but I mean, here's the question I'll ask you. I mean, which is, let's say I decide, for whatever reason, I'm the wrong example because I don't have the competency, honestly, but say a person decides to scrape all of the tasty content and launch, tasty trade with 2 Y's, tasty trade, or tasty works AI, and set up a paywall to talk to AI Tom and AI Scott, and for that matter, AI Dylan and AI Ilya and AI Victor and AI Liz and all the things. And that I'm using Tasty because it's the obvious example. You could do it with Schwab. You could do it
Sure.
with, you could do it with any customer facing asset, especially one that's analytic heavy, right? Probability of this, probability of that. That is what I don't understand what the protection is from that.
I don't either. I mean, I don't think anybody does, because I don't think that to this point that's really been tested. And so I don't know what that's going to look like. I mean, should people that create content, that don't charge for that content, that don't personalize that content, do they, to what level do they own that content, and what level should they be compensated for if somebody else decides to use that content?
Because in theory, a person could write a book about Tasty Trade without Tasty Trade's authorization.
Yeah,
and be like, I studied that. I've watched 10 years of YouTube videos of Tasty Trade, and here's everything that I learned. And they could write a book, and then they would collect the money from the book, and Tasty Trade would get nothing from that.
yeah, sure, right, exactly. What do you do in that situation?
Well, I mean, in that situation, typically you're like, okay, well, the book's good marketing for Tasty Trade. Screw it. You know what I'm saying? Like that, that sort of thing happens all the time where people write, it's like reporters write books about whatever, the tobacco industry or the president or whatever.
Well, yeah, but
when you
don't
creep
want somebody
into
else.
AI, where I'm like, use Tasty Trade with 2 Y's to, get your YouTube videos or whatever, and I set up a paywall. I mean, I suppose you would be able to file some sort of legal injunction against whoever owned that paywall.
I would assume, I don't know. I think that's where we are right now too, and it's kind of a little bit scary. I like I said, I think that's where we are. I just don't know the answers.
Well, what do you think? Here's a parlor game for everybody playing along at home, and for you and I. What is, like, on pure economics, just for making money? Like, if it's a Stanford MBA class, what is the single best way to make money with AI? Whether it's creating a new business or applying it to an existing business, I'll say make money includes crushing operating costs. Like, if it can be a margin, I can take your margins from 10% to 30%, or it can be revenue growth. I don't care how the money's acquired. Where is AI most well positioned to generate margin?
I think we talked about earlier, it has to be efficiency. I don't see it anything else other than efficiency.
Efficiency for what?
It's
customer acquisition?
No, it's resource efficiency. It's just getting the very basic things done that have to get done. That
blocking and tackling of business, documents, filings, web maintenance, whatever.
Yeah, simple scripting languages, simple code. Yes, everything, all the above.
Yeah, I suppose I don't
know I don't know.
No, of course, no. I mean, no. Yeah. So, because when we talked about AI 3 to 6 months ago,
yeah,
you were relatively dismissive, not of AI as a big idea, but that AI was not really going to be a significant factor. That human beings are ultimately vast. That the robots can't compete with the people at the end of the day.
Yeah, I'm still a brains over bots guy. I'm fascinated. Like, we've built our own AI bot, and we've been debating how we're going to deploy it, and it's cool and all. I'm not sure it's enough of a differentiator to be a difference maker.
What is the bot's prime? So, because I was talking to Josh yesterday about what even is AI? right? Because if AI is sort of, there's the layers of it, right? Where like a search is Google, was Google AI, right? That was it. Is our Tasty's probability of profit AI in terms of analytic, or our Bloomberg's analytics AI, or is AI defined not by analytics or by search or by sort of assembly or organization or reduction of information, but rather through the manipulation of that information or synthesis of that information to generate utility of some kind. Because utility is where value lives, whether it's efficiency or whatever. I mean, what's your definition of what AI is? Relative to because I can't tell you the probability of profit on a trade, but I can go to my Tastyworks screen and clickety click. It'll give me all kinds of percentages. Is that AI?
That is, defining AI is really hard to do. I mean, I guess that is. If you're using the kind of the bot that we built for that, yeah, I guess. I mean, that's the whole thing. I think it all falls under that. And I think that's another problem with it. It's going to be almost impossible, to try to, I worry about everything from regulation to definitions to monetization. I don't think any part of it's easy. That was my whole argument of like, hey, how can you justify this valuation, which is some insane number that essentially says you have to double in value next year to maintain this valuation? And how do you do that? If people are struggling to figure out, if I build a car, if I'm the first person to build electric cars, at least I know what I'm selling. I can model it out. If I'm doing something, I can usually model it out. I don't have that same,
like, you don't think somebody could make a good pro forma that shows you how AI turns into a discounted cash flow that justifies NVIDIA's valuation?
I don't think so.
Outside of just incredible demand for their GPUs based on speculation about future business models that don't yet exist.
That's right. That's right. It is a super hard, it's a crazy hard topic because it's so broad. Like, I don't think you can define it. Like, this concept of AI is all encompassing. It doesn't have any boundaries.
Isn't the best comparison to say, well, what's the value of the internet? Like, AI basically is a platform for the use of information.
Yeah. Yeah. I mean, artificial intelligence is just this massive, broad generalization. You can use it for anything.
But you couldn't buy stock in the internet.
Right.
Right. But you could buy stock in search engines that use the internet.
That's right.
Or you could buy stock
and as an example, and what happened to those search engines?
They all went to nothing with the exception of Google, Netscape, InfoSeek, all those guys. See you later.
Exactly. And so that's my fear.
But even those were not internet. The problem was you couldn't invest in the internet. So you had UUNet, which was basically the NVIDIA, right? UUNet was like, we're making the hardware that powers the internet, whatever I forget the name of their equipment, but it was some core piece of equipment a la the NVIDIA GPU. And then you had the people that were running search, and they all went away. Everybody, including Netscape, which at one point was like,
that's the whole point. Everybody went away. And I'm just wondering, if you had asked me in 1999 or early 2000, what are the chances that everything from Global Crossing to UUNet and everything else goes away?
America Online.
Yeah. And I would have said the chances are zero, just like where we are today. That's kind of the genesis behind today's discussion.
But I would say that, but do you, because I think this is a good metaphor. So if you use AI as the internet, we're not even at the phase where the UUNet or the America Online or the InfoSeek even exists. Like, it's not like that we're not seeing new companies that are using it. Like, there's not some new company that's like, oh, we use AI to do this fabulous function. I mean, I guess that would be ChatGPT.
Sure.
Microsoft.
And there's a few companies that have come out and said, hey, you know what? We've reduced our support team. We've done this and that. But, to be fair, We have not seen that, and our the bots that we built are really cool, and yet we have not seen like a reduction in the workforce or anything like that.
Could you use your bot to reduce your headcount on customer service where people call and they're like, oh,
No,
my account, I'm stuck. I
no,
can't log in. Like,
not yet.
whatever.
Yes, we can use the bot to say, hey, this is how you log in, but we can't use the bot to, for anything else.
Right.
So yes, if the question that comes into our desk most often is, how do I turn on my computer? We can use the bot. But unfortunately, that's not a question that comes up a lot.
That's not the number one call.
Right.
What are the top 5 phone calls for, not just for any trade help desk I don't mean this empirically like a real.
No, I understand, but things like
what are the general inbound?
Yeah, like what day is my ACAT going to hit? Like
when do I get my money is probably the number one.
Yeah, I mean, yeah, like when's my money going to hit?
Did you get my money?
Yeah, did you get my money? Or things like,
can I have my money?
Yeah, or tell me how AI is going to step in front of this one, which is I'm managing my position. Don't touch it. Like I got this.
Oh, meaning that it's like a margin situation, and
yes,
they're like, give me some room, it's coming around.
Yes,
long-term capital style.
Or it's the risk department calling you up saying, hey, you better send in money or we're liquidating you. Like all these are not AI questions.
AI can't make it, but AI can't massage that one.
Yeah, the AI questions are like, hey, what time do we open tomorrow? Or, are you open on Saturday? Like those kind of things. Yeah, it can handle that stuff. But the tough stuff.
Yeah. So and that's why I get to what is AI, right? Because in theory, AI is supposed to be able to do the difficult. That like AI can drive a car, AI can, program your.
Of course.
Would you short any of the AI stocks?
Yes.
Are you short any of the?
Well, I'm short NVIDIA because I know you were mentioning before what idiot would short NVIDIA. That'd be this idiot. But
by what mechanism? So how are you managing the obvious risk that it's going to blow up in your face?
Defined risk in NVIDIA.
Meaning you're selling call spreads of some kind.
Yes.
You're basically selling out of the money or call spreads above it.
Yes. But I have lots of other positions on in different underlyings. I mean, it's not just.
The reason you have that on is based on some version of your mind churning on this discussion?
No, the reason I have that on is because I feel, well, for some of the topics that I mentioned earlier, just like I just feel like it's overdone, overheated. I could be wrong. I usually am.
Well, no, for sure you're right. It is obviously overdone and it's obviously overheated. You're just in a mania. I'm not questioning the correctness of your decision. It's just the insanity of trading against that intensity of that level of intensity of emotion.
Yeah, and listen, it's been driving me crazy because I'm trying to figure out, like the disconnect to me is the biggest disconnect I've ever seen, and I'm just trying to figure it all out because AI is it's very close to home. It's very touchable, and yeah.
But the touchability gives you more insight as to its actual tangible value, which it makes your short position more credible, certainly than mine might be. Sorry, that allows you to say, listen, this is not as valuable right now as the market believes it is, because you have every incentive to extract value from AI. You have huge costs. You have huge opportunities. And if you could just bump your percentages 1 or 2 percentage points, that's real money.
Well, I mean, what is Dylan Radigan going to use AI for?
Yeah. I mean, for me, the truthful answer is we're working with technology companies here in Europe with fashion brands, with art museums, with agricultural institutions to be able to encrypt and identify through some form of a digital passport every single item that exists. So every wine bottle, every piece of cheese, every piece of clothing.
Yeah, but how is that AI?
That's not AI. That's a data catalog
Right.
that allows you to train AI. Because the biggest issue that I believe AI has is that AI right now is deriving its information from a generalized scrape of the theoretically all available information, which I actually think makes AI less valuable. And I think an AI, to bring it back to the financial discussion, an AI that is only trained on things that Tom Sosnoff believes or the Tasty management team believes are the most relevant and valuable for trading. I would rather have a trading AI where Tom Sosnoff controls the training catalog for that AI on options trading than have an AI that generally scrapes all available options trading information.
Well, that's the other part is that, how do you stop AI from being, you know, overly dilutive and then.
I think that's the number one. I think that's the thing. That's where I think the biggest opportunity is, and that's where we've actually been having a lot of receptivity here. Is if you can refine, if you can gate the catalog that the AI trains on, then you can make AI more valuable.
I don't disagree with that at all.
So you're asking me what my relationship with AI is. I say the biggest flaw in AI is the absence of a curation of the training data, and that the opportunity is, would you rather have I mean, you can do it with 1,000 things. Would you rather have food, your favorite chef decide, your favorite chef in Chicago from your favorite restaurant, make an AI that gives you all of the best food based on his and the best ingredients, or would you rather have AI scrape everything in the world, right? And you're gonna be like, no, I want Chef, Pierre's AI because he has the best catalog and judgment, or I want Tom's trade AI, or I want, that's where I think there's value. That's why I'm surprised that you're not more down the line at Tasty on an AI that helps with trade selection. It basically that just escalates. You're already doing all these analytics and all this technology and all the IV and IVR and mean revert, all the things that Tastyworks does and you've been developing for decades. And I would say that the next level is then to utilize the AI so that I can say, listen, out of these 10 trades, which of the three that AI likes the best and why?
Yeah, that's really hard to do because then you get into, then you start, that's like a recommendation.
Because you're on a regulatory now, because you're now recommending.
That's right. It's a,
so what if I did it? So now we're into the other problem. But so let's say an outsider, not I'm the wrong example because I'm an insider, but someone who has no affiliation with the company.
Then why would anybody listen to you?
No, I'm saying, yeah, it's that, yeah, you're right, because it's like I can either have Chef Pierre's.
That's right.
Train or Tom.
Either you're Chef Pierre or you're not. That's how it works out.
Right.
Yeah.
Right. But you're saying if you're Chef Pierre of trading, which you are, then you can't actually empower an AI for trade recommendation from a regulatory standpoint.
That's right.
You sure about that?
Yes, sure, of course.
Because don't you think that's the highest value proposition for AI? Because not everybody gets to ask Tom what he thinks. There's too many people that want to know what Tom thinks. And forget what Tom thinks. Like what variable, if Tom created a custom catalog, but what if it's not? I understand why Tom can't recommend, or Tom or whoever, Tasty can't recommend, but why can't Tasty train an AI catalog that recommends, and you're just responsible for the training catalog? You're not responsible for what AI recommends.
Well, somebody could. I can't, but somebody could do that, but not somebody that works with us.
So you're saying you can't curate a catalog to train the AI?
Yeah, and again, how do we monetize from that? That's the whole problem.
You put up a paywall to use the AI to get the trade recommendation.
Okay, well, let me just say right now, that doesn't exist.
The demand, what doesn't exist?
There's no demand for that right now.
For that, no one's going to pay for the AI paywall to get
That's right.
the AI recommendations. Are you sure about that? People spend a fortune on these newsletters and cockamamie, all this
Okay, I'm just
half-assed.
telling you, find it for me. I haven't found it yet.
Okay.
Yeah. I mean, AI driven.
What about the self?
What?
How about in transportation, logistics, optimizing logistics, reducing basically and all the empty trucks that sit around, all the empty logistics station that sit around, all the empty shipping, all the downtime in the supply chain could be theoretically compressed massively with AI. Packing
Should
pallets, consolidating
should be
trucks.
doable. Should be doable. I don't know if it is. And again, is that really AI? Or is that just
Again,
optimizing, like
or
we're
is that
calling every piece, I wrote it down here. We're calling every piece of technology, you know, um, I don't really know that that's AI. I'm not sure where the artificial intelligence in there is. If it's just plain logic, is that even AI? I don't know.
well, I mean, again, that was my earlier question, and I would say, it's AI insofar as it is, if a computer knows where all of the objects that want to go someplace are, and knows which places they want to go to, and then knows where all of the empty containers on trucks, trains, boats, and planes are, and can basically match the objects to trucks, trains, boats, and planes in a way that 90% of the time a truck, train, boat, or plane is being utilized, as opposed to whatever the utilization rate is now. Like it comes back to your original premise of aggregate efficiency being the primary manifestation of value, and the ambiguity right now is whether the aggregate efficiency is remotely as impacted as the valuation suggests that the impact will be.
That's right. And that doesn't even solve for the whole problem of whose data is it building these models off of to start with, and should they in
The
any
training
way,
catalog.
yeah, the training catalogs, and should they be compensated in any way, and is there an obligation, a legal obligation to compensate, the training models?
I don't see how there's not.
Okay, well, if there's not, then that's another piece of the pie that has to go. That's another piece of the pie that has to be paid out.
It's a cost. That's more friction, basically. If there's a royalty.
That's right. And I couldn't figure out how you make money without that friction. If you add that other friction back in, that's even more cost. And then you're up to a point where I do not know, where the revenue comes from to pay for this, which leads back to my original question, which is, have we got to a level where these AI stocks and these chip stocks are so overpriced right now that there's no way that they can ever generate enough revenue to justify these multiples?
I mean, for sure, that is likely, yes. But how big and how short are you willing to be, right? And other than NVIDIA, where would you get short?
No, I agree with you. I don't know the answer. I'm just bringing up what I think are some interesting points about,
I agree.
it's because people talk about this stuff with, it's so freaking reckless. And I watch it every single day and I listen to it, and and the level of recklessness is just, to me, it's like, oh, I mean, I traded through the .com era. I'm very familiar with this, and the vibes are the same. And I'm not saying, the internet played out. It was everything. Internet was everything it was supposed to be.
Everything and more.
Everything and a lot more. We can't, it's it's basically been my life for 25 years. It's everything and more, just like you said. And I'm sure AI will be everything and more. But, there were 5 survivors, at that, of certain magnitude. And I kind of feel like it's the same thing.
And Intel was theoretically the NVIDIA of that moment.
Intel and Cisco.
Even Sun Micro for a moment.
Intel, Cisco, Sun Micro, Lucent. Yeah, all of them.
Yeah.
And they're all nothing now. And, I'm not, suggesting it's exactly the same, because I'd like to think that markets evolve, and but the paradigms, risk paradigms never shift, and emotions never change that dramatically. Like the paradigm for investing and for risk emotions and investing emotions never changes. So the same kind of situations that existed in 1999, 2000 exist today. And that was my only point about this whole thing with, with I view the world of digital assets so much differently than I view the world of AI, because the whole digital asset space, which is a technology space, is only like, let's call it, 1.5 trillion. Okay. But the whole asset space that is so-called AI, is significant multiples of that. And I can see the stored value in digital assets more so than I can see it in AI.
Really?
Yeah.
I mean, but don't you think AI? On the one hand, I understand what you're saying, but on the other hand, basically, if AI is the new universe in which we will all function, right? Instead of the novelty of being like, "Oh, look what I can do with AI," or you get these one person like it's like people like, "Oh, look, I made a website," and or whatever. Now, it's ubiquitous, right? The internet is just sort of there are not internet companies; there are just companies, and every company has some internet component to what they
Yeah,
do.
sure. Sure.
It won't be AI companies. There's just going to be companies, and every
Yeah.
company will use
Yeah.
AI
Yeah.
as
Yeah.
a
Yeah.
resource. And so it's more a matter of the desperate. I think it's because everybody knows that what we're talking about, which is AI, is going to be super valuable, but there is no apparent location to sort of to capture that value. So people just buy whatever's available at the time, which at this point is the chip stocks, more or less.
Okay. I feel like we've
Have we exhausted this issue?
yeah, I feel like we have. I mean, I don't think we've defined AI, but at the same time, I think we've defined what I consider to be, like, looking back at 2000 and looking at 2024, I think there are an incredible number of similarities. And like, there's no question AI is going to be, it's a generational, it's a technological revolution that is generational. The question that I have is just, are the prices so far ahead from a monetization standpoint? And when I look at like digital, because I'm trying to think of all the technologies that have changed the way we do everything in the last, whatever, 5 or 10 years. And when I look at the digital asset world, what I like about it is a true, what I feel like is a true free market. Because it's a it's just a single asset, single price type thing. When I look at AI, it's much more complex, and it's far less of a pure play. So it's kind of this commingled, investment, and I don't think it's pure at all. So I think it's much more difficult.
I completely agree. And I admire your NVIDIA short position. I tried a few times last year, much to my
Well, it
demise.
hasn't worked. Let's put it that way. It hasn't worked. And it's going to be a lot. It's going to be quite the battle. But that was good, Dylan. I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. It's an AI discussion where I don't think there was. I think we're going to be. I think we're going to be back.
Well, no, but here's can I just terrify everybody before we
Yeah.
end this conversation? So the number one issue is called the autonomous agent, which is the thing that is at the government level where all the discussions are: the Chinese government, American government, European government, Russian government. Because the autonomous right now AI is only as good theoretically as the prompts, as the user's ability to prompt it into doing things. And they're like, oh, if you're a good prompter, you can do this. If you use the wrong prompt, that's why you got the bad product. Blah blah blah. Autonomous agent takes that off the table and it just says create an AI that can rob all the banks. Figure it out, right? Like that's sort of the fantasy Doctor Evil application of AI is the autonomous agent, where you simply give it an end goal,
Yeah.
and then it has to figure it out.
Yeah. No, that's a real risk. But the other side of that risk is expose all the terrorist groups in the world right now.
Yeah,
And
I get it.
yeah, so there's two sides to that argument, which is there's the goods, There's
rob all the banks,
rob all the banks, or tell me where all the
bring
terrorists are hiding.
Yeah, or both.
Yeah. Yeah. We could make everything so much easier if we just chipped everybody.
I don't. Enough. We're not your dog. Okay. So just leave us alone.
I'm Tom Sosnoff. He's Dylan Radigan. We'll see you guys next week.